So over the past few years, I've been actively investing in the cryptocurrency market. And in this video, I'll explain why I think it's the perfect type of market for active investing. In other words, trying to pick the individual winners and not taking the passive approach. This isn't based on a philosophical argument either. I'm not going to tell you it's because Bitcoin is the future of money or because Bitcoin is gold 2.0. No, you know I like to approach investing from a purely scientific, data-driven approach. So that's how we'll approach this too. I'll be explaining why actively investing in cryptocurrency actually makes a lot of sense based on the data. I'll be showing you a specific niche of cryptocurrency that has performed exceptionally well over the past 18 months. And if you're thinking to yourself at this point, but cryptocurrencies like Bitcoin don't produce anything, so they're worthless. Warren Buffett said so himself. Well, many of the investments in this particular niche I'll be showing you actually offer a dividend, like stocks, or they implement a buyback system that works in essentially the same way as a stock buyback. So despite what you've probably heard about cryptocurrencies, the truth is they are not all the same, and some of them even act, to be honest, very similarly to shares in a company. I'm also going to highlight the risks of investing in cryptocurrency because, and let's be clear very early on, this is a very risky type of investment. And so personally, I think it only really makes sense if you're talking about a small percentage of an overall portfolio. I know a lot of people avoid talking about cryptocurrency because they fear they'll come across as either shilling or scammy. Well, all I'll ask is how open-minded do you consider yourself to be? If you can be open-minded for this video, I'll be using data to make points and try to leave my own opinions out of it as much as possible. Okay, so I'm not going to make you wait until the end of the video to really get into the reasoning either. Let's just get straight into it. So let's think about it for a second and ask ourselves, what would a perfect hypothetical market be for active investing? What would it look like if we could design a market ourselves which was perfectly optimized to allow us to be successful in picking the individual winners? What would that market look like? Let's lay all the criteria on the table first, and then we'll just go through it and see how cryptocurrency matches up to this. So the first thing I'm kind of thinking of is, who am I competing with? Who are the other investors in the market? If I'm up against billion-dollar hedge funds as a standard, it's not going to be very easy. In fact, it's probably going to be quite tough. What I really want is to be competing against average, everyday investors as my main competition. Number two, I want the market to be inefficient. Now, I'll go into more detail about this shortly, but basically the more inefficient a market is, the more overlooked opportunities there are in this market. And this is exactly what we're looking for. Number three, I want the market to be generally trending upwards. If the market is growing most years, then I have a better chance of finding a great opportunity. And finally, number four, I have to understand what I'm investing into. So let's see how cryptocurrency matches up to those four criteria. I know what you're probably thinking, but I just don't understand cryptocurrency. So let's tackle that first. Well, like I said earlier, every cryptocurrency is actually different. Just because you don't understand Bitcoin or Ethereum, it doesn't mean you don't understand cryptocurrency. Again, let's be open-minded, and I'll actually give you an example so you can see what I mean. There is an exchange out there, kind of like the Nasdaq or the New York Stock Exchange, but instead of stocks, of course, it's cryptocurrency, so you're trading things like Bitcoin or Ethereum. This exchange created a cryptocurrency, and if you hold it, they'll pay you 50% of the trading fees collected on the exchange, and they pay you each and every week. So imagine I said to you there was something you could buy which entitled you to 50% of the trading fees charged by the Nasdaq, and you received this payment every Monday. I think most people would be surprised to hear that this type of investment exists today in cryptocurrency, mostly because it's actually really quite easy to understand. It's nowhere near as confusing as something like Bitcoin. In fact, this particular niche has performed so well over the past 18 months, and where I've been focusing most of my attention often uses dividends or stock buybacks. So some of them aren't as dissimilar to a regular stock as you might think. In fact, if we take a quick look at this table here, we can see a column at the top labeled as the PE ratio. That's right, many of these investments can even be valued based on their PE ratio, which is probably not what you're expecting when it comes to cryptocurrency. The name of this particular niche is called DeFi, which is short for decentralized finance, and I'll be pointing you in the right direction to learn more about it at the end of this video. But first, let's talk about those other 3 key factors. Remember, one of our criteria was that I don't want to be competing with billion-dollar hedge funds as a standard. I want the average investor to be investing as a hobby on the side. Well, when it comes to cryptocurrency, the average investor is a retail investor, people who invest in their spare time on the weekends. That makes the competition less, and so my job to find those overlooked opportunities becomes easier. Now, it should be noted that more and more professionals are moving into the cryptocurrency market, as we have some of the world's largest funds beginning to dip their toes in, and this is to be expected as the industry matures. But the truth is, at this point in time, it hasn't really happened yet. The next criteria I'm looking for is an inefficient market. Now, what do I mean by this? Well, essentially, there is this idea in investing that information is priced into stocks. And this is done so well in markets like the stock market that it actually becomes very difficult to find an edge in the market. It becomes very difficult to find an overlooked opportunity. This is actually based on a really interesting theory that I won't bore you with in this video, but I do recommend you research. It's called the efficient market hypothesis, and it's been around for many years, but people often credit it to Eugene Farmer based on his work in 1970. But anyway, what does this actually mean for us? Well, you see, the more efficient a market is, the better the information is priced into the investments. And so the more difficult it is to find this edge, these overlooked opportunities that we're looking for. The less efficient the market is, the more likely it is that the market hasn't priced certain things correctly, and so we can find one of these overlooked opportunities. Well, when it comes to the stock market, it is extremely efficient. It's not perfectly efficient, so there are still some opportunities out there, but it's a lot more efficient than something like the cryptocurrency market. So with the stock market, we all know about the Teslas, the Amazons, the Facebooks, the Googles, but most of us probably don't know much about the individual companies, maybe outside of the top 100. But the thing is, there are millions of professionals worldwide who are specializing in exactly this area, the companies outside the top 100. So they make it extremely difficult to find an edge in that area too. And this competition really continues all the way down to the very bottom of the stock market. Well, the truth is, when it comes to cryptocurrency, most investors won't even research anything outside of the top 100. And this creates the market inefficiencies that we're looking for. It creates the overlooked opportunities. Now, I want to add that this also increases the risk. Just like the internet back in the late 1990s, there are many scams within cryptocurrency, which is why we have to research thoroughly before investing into anything to avoid these types of danger. Remember, research is our friend. The key thing is, don't make the mistake of thinking that because there are scams within the market, that it means the whole market is a scam. The truth is, whenever new technology comes along, scammers out there want to take advantage of people before people have learned how to use that new technology. Remember how many scams used to come through to your email years ago? Well, just because scammers used email, it didn't make the underlying technology. It didn't make email or the internet a scam. And the same thing is true for cryptocurrency too. And thankfully, there are some brilliant explainer videos right here on YouTube that will keep you safe. In fact, if you want to store your cryptocurrency safely, there is even a link in the description below so you can use the exact same device that I've been using for several years to keep my investments safe. So feel free to check it out below. The final criteria I'm looking for is that I want the market to be generally growing. I want to see that upward trend. You see, I don't want to invest into a market which is shrinking or stagnant. Again, I could make money by doing this, but it just makes my job harder. If the market is generally rising, I need to beat fewer investors to make a profit. So when it comes to cryptocurrency, it's actually kind of a funny one because everyone heard about cryptocurrency and Bitcoin when Bitcoin hit $20,000 in late 2017, and then it crashed. It went out of the news, and because everyone heard about it at its very peak, most people have this conception that Bitcoin had a single good run, and it's been a bad investment for everyone except those who got in at the very beginning. So I'm not going to try and sit here and tell you where the market is headed. Like I said at the start, I'm approaching this purely based on data and science. So instead, let's just look at some of this data. This chart is entitled Bitcoin Profitable Days. And what it tells us is if we bought Bitcoin on any given day and held it until today, would we be in profit or not? Well, quite remarkably, the answer would be yes 92.1% of the days of Bitcoin's history. The problem is, most people heard about Bitcoin during the not profitable 7.9% of Bitcoin's history. So I would say that context is everything. Imagine you were watching a game of football, or soccer as some of you might say, and Team A was hammering Team B for 92% of the game. Then your friend comes along and watches just 8%, and during this time, the tide totally switches and Team B were on top. Now, you would understand why your friend, who only came along for a short time, would think that Team B were better, but you'd also know that he'd only seen a fraction of the game, so he really can't judge. In fact, the only way they could judge is if they watched the whole game back on replay. Well, thankfully, when it comes to investing, we don't have to do this because we can look at the price history, and that's exactly what we're doing. This chart is a logarithmic price chart of the total cryptocurrency market cap. As we can see, it's certainly had its ups and its downs along the way, but the general trend has been upwards over several years, and that backs up the previous data point we looked at. This chart shows us the price chart of the total cryptocurrency market since the beginning of 2019, or 18 months ago. The market has more than doubled in the past 18 months. So I think it's fair to say that the overall trend of the crypto market has been upwards since its inception, and actually with much more consistency than most people would think. The idea that only the people who got in early made money is simply not true, as we saw with the last chart, which started just 18 months ago. But here's the thing, I don't want to lull you into a false sense of security either. So what I've done here is I've cherry-picked the very worst dates for the market. During 2018, the market had a horrendous crash. As you can see at the very end, the market begins to pick up. So I really have picked the absolute worst dates possible. But the reason I've done this is to make a point really clearly. I always talk about diversification in my videos. Well, I am certainly not advocating anybody go all in or anything close on cryptocurrency. Not at all. The point I'm making is that when a market ticks all of the boxes I've mentioned, it's filled by amateur investors, the year-on-year trend is generally upwards, and the market is clearly inefficient, it means there are more opportunities to make money in that market than in another market. It also means that the market probably hasn't matured yet, so it's more volatile, and the risk of losing money is greater too. So everything I'm discussing here is based on the assumption of investing as part of a well-diversified portfolio, and only a small amount being dedicated to this market, really an amount that you can afford to lose. Let's be very, very clear about that. There is a chance that Bitcoin may drop to zero. Now, I don't personally think that it will, but I'm trying to leave my opinion out as much as possible to really focus on the data. And of course, it is theoretically possible. The rest of the crypto market is also heavily influenced by Bitcoin. So I'm saying that the data looks to me like this could be a unique opportunity, but the risks are high. And so diversification across other types of investments such as stocks, bonds, real estate, commodities, etc., are of course extremely important. So please don't misinterpret this video as me saying that going all in on crypto is a good idea, because it really is not. Only as a small part of a well-diversified portfolio does it begin to make sense. And on top of that, any investments into cryptocurrency should also probably be well-diversified across the market too. Okay, so I'm going to stop banging on about it, but really just be safe with your money. Don't invest more than you can afford to lose. Okay, so I'm going to touch on what this specific niche in cryptocurrency is and why it's been doing so well over the past 18 months. It's known as DeFi, or decentralized finance. Essentially, it's using the blockchain technology to disrupt traditional financial systems like banking. Now, let's be honest, this is not going to be an easy task. Finance is heavily regulated, and as we know from the internet, disruption just takes a long time. Netflix took a long time to disrupt Blockbuster and eventually put them out of business. But the first thing is, when it comes to investing, you have to consider the size of the market. So this chart shows us how much money is locked up in DeFi, which gives us a roughly good indication of how well DeFi has been adopted. Let's be clear, this is not a price chart. This gives us an indication of adoption, not price. And there's two things we can really see from this. Firstly, DeFi is growing. And again, not just in price, but in terms of real world adoption. And number two, check out the scale of the adoption. As of today, there is $2.3 billion locked up in DeFi. By contrast, JP Morgan, which is just one bank, is worth $293 billion. And they hold more than $2.5 trillion in assets. So if you're thinking to yourself that DeFi won't disrupt traditional finance, so let's just write it off. Well, to be honest with you, that actually doesn't make a lot of sense from an investing perspective. What actually matters is, will it grow from the current adoption levels? You see, if it grew 10 times larger, let's say, than it is today, there would probably be some incredible investing opportunities associated with it. And yet, at that level, it still won't have even begun to disrupt traditional finance. So don't conflate the two ideas in your head. Even if disruption is the long-term goal for DeFi, for us investors, what we care about is adoption. And based on what we've seen over the past few years, it's not unfeasible, I would say, that adoption could continue to grow. And this is being reflected in the price of the cryptocurrency projects that are building DeFi too. Since the beginning of 2019, just 18 months ago, there are 3 projects I picked out, which I'm actually not going to say the name of, for the reason that I don't want anyone to think I'm saying you should go out and buy them, because I'm really not. But these 3 projects have increased in 18 months by 8 times, 11 times, and a ridiculous 70 times in value. So again, don't just try and go and find these projects, and I'm really not suggesting that anyone go out there and do that and just buy any cryptocurrency, because the truth is, like I said earlier, you probably don't even understand what this is, and you can't invest into something unless you understand what it is. So why am I talking about such impressive returns in just 18 months? In fact, why am I talking about DeFi at all? Well, because I'm really excited about DeFi. I want to share it with you. Not so you'll invest, not at all, but so you may consider doing some research on it yourself. I really want to pique your interest so you want to learn more, because I think there's something really interesting here. And here's the thing, you may completely disagree with me, and that is absolutely fine, but you have to research something before you can have an opinion on it. So please just don't dismiss DeFi until you've at least researched it. But also, don't go the other way either and decide it's suddenly great just because a few projects have done well recently. If this is the first time you've heard about DeFi, my only goal with this video is to let you know that I think it's arguably the best thing to spend your time researching. And I want your feedback. If you do want to learn more, let me know and I'll start making more videos on this topic. If you don't want to hear any more about this, let me know that too. I want to know what you want to see more of. And in the meantime, you can check out this video up here, which explains the basics of what DeFi is and covers a few specific projects. And of course, thank you for watching.